Deepwater owns Nvidia stocks. Gene, it was good, just not good enough.
Yeah, I would actually say it was great, but not extraordinary. And that's really what this needs to be. And when you think about extraordinary, you got to beat the whisper on what the raise is. And so the whisper was that they're going to raise by a couple billion. They raised by $1 billion for April. As however you said in the setup, is the margin guidance. They talked about that being a couple percentage below what the street was at, 1% specifically, at 71% versus 72. And when you have a company like this that, of course, the expectations are so high, I think in any normal environment would be down. When you talk about margin pressure, I think it's justification for the stock to probably trade lower on the first trading tomorrow morning U.S. time. I expect it probably to be down. My guess is probably around 5% because I think that margin really stung. And it was interesting to look at the stock in the after hours trading. It was up a couple percent up until a few minutes to the last question on the call. And the question was related to tariffs, and specifically is, can you get that ramp in margins? Because I mentioned the negative commentary about April margins. They also said that margins would ramp in the back half of the year, back to the mid 70%. So it goes basically go from 70% to 75%. And can you achieve that with the tariffs situation getting more intense? And the answer was, we don't know. It's a fluid environment, and it's not baked into our guidance. And so you quickly saw the stock drop a couple percent, and it's kind of faded since then. And so what that tells us, that stock reaction, looking at it in the aftermarket, it really gives insight to what investors are thinking. And what they're thinking, the central question they're asking right now is, can these margins ramp in the back half of the year? And I think that was a little bit in question. One more point that's, I think, critical here is that the setup going into this, one of the central questions, a pressure point, which I would describe it as, was what was the backlog? How long would they be sold out of Blackwell in calendar 25? And last quarter, when they talked about calendar 25, they said it would be several quarters that they'd be sold out of Blackwell. And a lot of investors were focused on, like, what's going to be the new commentary? Are they going to say that it's sold out for the full year of 25? That kind of was the expectation. But they pulled that language from the CFO letter, and surprisingly, no one asked the question on the call. And I think that kind of the absence of that, I think, is also nagging at investors kind of some of their confidence right now. So I just want to highlight, it sounds like I'm really down on Nvidia, but I just want to highlight that there were some headwinds, but there are also some very positive long-term pieces to it that I think will ultimately, even though the stock trades off tomorrow, cause the stock to move higher over the next year and 2 years.
So, Gene, a lack of clarity on how it might do in the coming quarters and coming years, for that matter, 26, 27. I mean, you alluded to the demand for Blackwell, for instance, how strong it's going to be. What is the sense you're getting? How are you reading into all of that?
Well, I think demand is, they said that it's at all-time highs, but ultimately this concept that we're early and you need hardware to build that, I think that is really important. The other piece is that they talked about the performance difference with Blackwell being 2 to 8x better than anything else, any custom chips. So ultimately, I think that this is still very early in terms of where the demand curve could go. So I think we're still very early. Like, how early are we in AI? We're probably in inning 1 of a 9-inning game at this point.
So given expectations of that 5% drop when Nvidia trades tomorrow, your time, would it be a buying opportunity if you believe in the longer-term story of Nvidia and AI, as you alluded to as well?
Ultimately, it is. And I think the central question is, can they exceed the numbers for calendar 26? That's what this all boils down to. And so the 25 is kind of a throwaway because we just got to get this ramp in the back half of the year. But the street's looking for 23% growth. And that's the question that I think all investors need to ask themselves. From our perspective, we think that they could probably grow 30% or better in calendar 26. And part of that reason is, again, this need for greater compute. And I just want to put a finer point on that. How can they grow faster than that 23%? Jensen did not give that critical update in terms of how the backlog was, where they sold out for this year. But he did say something that the need for compute for these next generation models is going to go up exponentially. And the numbers he gave were so crazy, it's just hard for me to even wrap my head around it. They're so crazy, he almost loses credibility on it. But let me just frame those in. Is that he said when you do a spot prompt, which is something basically asking a generative model a question where you get a quick response back, that the shift from that to reasoning, when it thinks a little bit longer on it, this of course is one of the big trends in AI, is the shift from just generative AI to more reasoning AI, is that reasoning piece requires anywhere from 100 times more compute. That's where he started at in the call. And then a minute later, he said it could be thousands, hundreds of thousands, or 1,000,000 times. I did go back and check the transcript on this. 1,000,000 times more compute. And what he's saying is the need for this advanced compute to really power reasoning, and then what's considered physical AI and robotics AI is still going to be ramping. And that's ultimately why I think that this is a buy here on the pullback, is that if in fact we are going to see several levels of increase in the compute, they're going to have a great business for the next several years.